Hey folks, this is Kat with charts for sharkcharts.live, and today I'll be discussing 3D wave PM. In my earlier video on regular wave PM, I gave a more full explanation of the background and theory behind the wave PM indicator, and understanding this indicator is kind of contingent on understanding what wave PM looks at. So my suggestion would be to watch that video first if you haven't. With that, let me introduce you to 3D wave PM, which is our heat map indicator. And the first thing you should know about heat map indicators is that they're not really what PineScript was designed to do. And as a result, it loads slow, it can lag browser windows, so it's often easier to do your drawings on a different layout and you have 3D wave PM on. And you should particularly avoid clicking the settings menu unless you are willing to let it lag your browser for possibly a minute or longer before it actually pops up with the settings menu. And I know this is an issue with heat map indicators in general because I've had somebody with a different heat map indicator on TradingView reach out to me and say, hey, do you have the same problem with your heat map indicator? So generally, you'll be wanting to use default settings on 3D wave PM, and generally you want to use 3D wave PM Lite instead of the full version because it does load faster and more stably. So the next thing to say is that 3D wave PM is actually designed to use log scale, where this is a range of period lengths from 14 to 600 that when you go over to the sidebar over here and set the indicator scale to log, cleanly stitched together into a relatively continuous heat map. So the colors correspond to the same thresholds that you'd be familiar with from regular wave PM. And I've set it up so that there's a relatively discontinuous color break when you actually cross between the different thresholds. And then within the thresholds, it's actually a gradient. So the compressed area is a purple to blue gradient. You won't often see purple, but you'll see a lot of blue. An aqua to yellowish green gradient is your neutral. Then there's a distinct color change to yellow, which will then mark your yellow to orange gradient for the expanding sweet spot. And then the overexpansion red starts as kind of a brighter orangish red and turns into a rose at the highest readings. The other thing to know is that it switches between dark and light. So when it's light, that's it saying that the indicator is actually moving up on, and when it's dark, that's to say it's actually oscillating down. But since this is a heat map indicator and you don't have that scaling to work with, I've tried to convey that information with a on-off, lit up or not lit up color coding. So there are a couple pieces of information that you can use this indicator for. The one you'll often see DadShark do on stream is he'll use it to search for the longest overexpanded period, where we look at a recent expansion. Here I've got the Bitcoin dollar daily chart up, and you can see that as it made this move, the longer period bands and the short period bands were both relatively compressed. We got a large overexpansion of the shorter period bands that had a domino effect into overexpanding longer period bands. So the way that plays out on 3D wave PM is that as we continue down and continue to expand the bands, they expand further and further and further out on further and further period lengths until they finally exhaust somewhere. And that makes for your longest overexpanded period. So here it's roughly the 250 period. So if we load up 250 band, what you see is that we haven't actually reached it. And generally, until we cross these pivots for mean reversion, we would be willing to say that we're trending on that period length. So we would get to this band, and the first thing we would expect is that we're probable to bounce down off of it and continue the bear trend. And you can kind of see that as we've compressed shorter period volatility and moved up, we've kind of readied ourselves to do such a move where by the time we actually reach out to here, we are pretty well set up to expand these shorter period bands again underneath it and resume trend. However, since we deal in probabilities, it's worth saying that should we break this pivot up, it would indicate that we are behaving more normally more normally distributed on that period length, and a mean reversion would be predicted. And that would mean a larger rally in Bitcoin. Probably we'd meet it close to where it broke down in the first place. That average is currently 63.07. It's a moving average, so it would come down a bit. So if that actually played out, you'll see a lot of people happily touting how, oh look, it hit the static support and resistance. Well, no, actually, the mean reversion on a moving distribution and happened to hit it at around the right time to do that. But it wasn't necessarily probable that it even reached out that far in the first place. So this isn't the cleanest example where I can just show you how finding an overexpanded period just bounces off. It is a clean example of volatility overhead, because what I'm saying specifically here is that these shorter periods are compressed and they're ready to make a move, but this longer band, you can see that it's still moving down because it's still dark. It's still making its way back through the color scheme. So when you see a volatility overhead scenario, you're looking at a situation like that where wave PM tells you expansion, contraction. It doesn't necessarily tell you anything about direction. So since the different period lengths above you could be moving in either direction, you can compress on the lower periods because they're shorter time frames, and they can go through a full cycle and they can start expanding again. But as soon as they start running into these overhead periods that are still compressing, that could be moving in either direction, it's a good bet that that's where they're going to run out of steam. But I did also pull up a chart where there's a really clean example of following and finding support on the longest overexpanded period. So here we have the November decline in ETH BTC, and it really clearly expanded up to about the 240 period. And then here, as it had its really nice relief rally, it started expanding back up. Had a retest here, and around about the 200, which hit that pivot pretty well. And right now it's kind of hanging out here looking like it's crossed this 200 pivot, but it's also overexpanded this plume just a bit further to also be around the 240 pivot. And that's sort of perfect and beautiful. We load up a 240 band here, and we can see that it was also retesting the 240, which was predicted back here. And right now, it's finding support along the 240 again. So that's not actually broken this period length down to do a mean reversion. And you might reasonably predict then that it will bounce up. How far it gets, whether it can actually sustain a trend, is a different question, but you would reasonably say that the risk reward is going to be pretty good if you were to take a long position along this band that has the previous confirmation and the 3D wave PM support, because you would know based on this bet and why you're making it that if it went down much at all, that you would want to get out because your bet doesn't make sense anymore. However, the risk reward on it is quite good. So on Dead Shark's template, you'll notice he has 3D wave PM up side by side with regular wave PM, and would recommend generally using both side by side because the regular wave PM is much easier to identify crosses. It's much easier to appreciate short-term direction based on see the oscillations of the rising and falling, with just a few traces actually using the full scale rather than relying on a binary color scheme. And as with other distribution-based entries and exits, we generally look at this macro condition that we identify with pivots, or what pivots are relevant on wave PM, with something like a much shorter period CCI to give us high confidence that the time is now right, where it's no longer doing something on shorter time frames that will mess with our ability to capture our longer time frame prediction before we would stop out. You're looking for probable scenarios in trading. So this sets the condition, and you then use some type of entry signal. So the last part of this video, I want to briefly go over the differences between 3D wave PM Lite and the full version of 3D wave PM. Like our other indicators, the full version of 3D wave PM includes support for multiple moving average types and several different ways to calculate standard deviation. I've got it loaded up here with VWMA and volume-weighted standard deviation. And I've chosen the ETH-USD chart specifically because right now volume-weighted moving average and SMA actually give you somewhat substantially different targets. So there is a pretty clear difference in this chart between those two moving averages. In a lot of cases, you won't actually see too much of a difference between volume-weighted moving average and SMA because volume tends to be relatively even on a lot of charts and supporting when it supports moves. But the high volume recently on ETH has kind of overwhelmed the pull on VWMA. But I loaded it up this way in part to show you that as far as wave PM is concerned, it doesn't actually make that much of a difference. You would get very similar readings as to the longest overextended period on the daily chart from VWMA. you see a little bit less compression overhead on lower time frames, I'd say. But broadly speaking, most people are going to want to be using just regular SMA and standard deviation, which means the 3D WavePM Lite is going to be less hassle, because when you combine a computationally intensive indicator with having to use a bunch of your own custom PineScript loops, this is much more likely to have issues loading quickly and lagging. And the other thing is, to take use of all the moving average types and standard deviation types, you then have to click this settings menu button, which would lag this browser for about a minute. So I would generally recommend people are using the light version for their charts. However, rather than just not give you guys the ability to try the full suite of tools that are programmed into this code and do actually work, we do give access to both the 3D WavePM Lite and the 3D WavePM in the same full tier of indicators. So you do have the option to experiment if you have a good idea that you want to try. And frankly, there isn't any other indicator I know of, at least on PineScript, that even lets you look at a detailed heat map of volatility on a weighted moving average with volume weighted standard deviation. So yeah, certainly if you have good ideas, you should experiment with them and share what you find in the Discord, because we've certainly built a lot more capabilities here into the more experimental can do anything version of this indicator than we've tested ourselves. Generally, for most cases, though, just looking at volatility and understanding the expansion contraction of distributions, your needs will be pretty well served by just SMA and unweighted standard deviation.